Hi, everybody, and welcome to the Middle Class Investor this week. This is Seth Martin, your host. It's Saturday, about 6:15, and we're starting off today here looking at the S&P 500 the way we normally do. And what can you say? We had a very strong up week. You can see here this big white candle after this kind of topping looking candle and then a couple of down weeks. We reversed, found support, and reversed and went up. What I want to do though is I want to look at a daily chart, because what's happening here is this corrective action is getting smaller and smaller time frame, and we need to look at a couple of critical areas. And I would say, let me just delete this right here. I would say the most critical area that I want to mark to the downside is this kind of 27.25 area right about here. 27.25. Because that's when if you kind of zoom in here. The reason I want to mark this area is because what you can see is there's a lot of consolidation kind of right between here and here. And this 27.25 area is kind of where the bulls took over. But you got to zoom in here, but there's a lot of corrective action. There's a structure here that is made up of a triangle, a large triangle, and then a small triangle within the last part of the larger triangle, and then a breakout. And all this could be, believe it or not, could be an A, B, and then the last part here that ran up could be C. Now, it could mean that we've still got a little higher to go, maybe up into here, into the top of this structure here. But if we could either come up here and then bounce down, and if we bounce down and break through this area right here, then this whole structure is broken, and this should continue down like this. Okay, so I want to give you a little heads up here. Now it is possible. Oops. That's not what I want to do. I want to do that. It is possible that this pulls back just a little bit and then turns around and goes up here and makes a turn off of this pivot somewhere right in here. I don't think that's going to happen, but it's possible. I mean, the market can do anything. So I think what's more likely is that we make a slight higher high than what we got here last week. Maybe for a day or two, and then roll over and make our way down this way. So we just want to give you a heads up. If this structure breaks here, though, there's serious implications for downside movement. If we break out of here, there's not necessarily serious upside potential. There's just potential into a new decision point off of this large pivot here. So the important areas are between here and here for next week. So we'll see how that plays out. So 2,800 on the upside, which would be about 40 points higher from where we are, and then about 25 points lower is critical on the downside. That's critical support. If we break that support, there's really nothing holding the structure. I know we have some pivots here and some pivots here and even some pivots here, but if we break this and start accelerating to the downside, what it means is that all this is a 2. This is a 1, 2, and then 1, 2, and then a 1 and some more 2 here. So we could accelerate very rapidly to the downside. So I wanted to give you plenty of heads up so that you can prepare If we do break this 27.25 area to 27.20 on a closing basis, it's probably a great place to exit the market. Anyway, that's enough of that. Let's look at volatility last week. Let's go back to the weekly. Did that work? I'm not sure if that worked or not. Let me open something else and then come back to volatility. Okay, yeah, that did work. So as you might expect on a big up week, volatility came back down pretty substantially, and we'll see if it follows through. I mean, if the market goes higher, then this is going to follow through the downside. But we may have seen the lows in volatility, this one and this one. So we'll see. It all depends on whether that 27.25 holds. If it holds, then we're likely to see volatility come back down into this area, somewhere below 12. But if it doesn't hold, then we could see volatility begin to spike on a pretty dramatic basis, taking out this old high up here around 50. I know it seems unlikely at this point, especially since there's so much positive talk about the economy and unemployment, and now one of the parties, I guess the Democrats, are talking about how we need to, bring in lots of immigrants, illegal and otherwise, because to handle our low unemployment, there's just not enough workers available. I mean, it's really incredible, the rhetoric. I mean, I'm not sure how anybody can look at our economy and go, we don't have enough workers. We've got plenty of workers, and just too many of them are sitting around doing nothing, collecting something off the rest of us. That's really what's happening. But somehow people have convinced themselves that no, there's just no workers. This older people are retiring, and meanwhile there's like 40 million men between the age of 18 and 50 sitting around doing nothing. So I don't know. Doesn't seem like we're low on workers to me. It seems like we're low on want to, but that's a whole other discussion. All right, let's look at the 10-year Treasury. Let's look at the short-term yield first, the 13-week. This is the one that we use to track what the Fed's going to do. The Fed's going to continue to raise rates. It's just what they do. Okay, what they do is they misread the market. They look at the economy and they say, oh, it's overheating, and they continue to raise rates. And then when interest rates go really high and start spiking, then they'll try to tamp them back down, but then it'll be too late. So we've had this line on here for a long time, and you can see we kind of traded sideways. Let's zoom in a little bit. Look at this a little closer. You can see that we traded sideways somewhere around in here while the 10-year pulled back. So we'll look at the 10-year in a second, and you'll see the 10-year pulled back during this. But the 13-week just traded sideways. Kind of poked out a little bit here. It's kind of retesting this zone, but it's probably going to break out next week or the week after. So I don't think there's too much more sideways left in that particular move. Let's look at the 10-year. So here you can see what I was talking about. The 10-year has been pulling back and may pull back further. This could be kind of the A and the pullback, and here's the B, and then we're looking for a C. Like I said, down into this area, I've been looking at I think this is about 2 percentage points. Let's back up and look and see. No, it's like 2.5. So we're looking for a pullback into 2.5 on the 10-year. Currently the 10-year is at 2.831. So that's a pretty decent pullback. So, and if it does make sense that could coincide with the market sell-off. As the equities start to pull back pretty hard, money might flow out of equities and into the 10-year Treasury. All right, let's look at some of the other countries. We haven't really done much of that lately. This is Germany. And you can see Germany got a bid last week after a pretty deep pullback. Got a bid and reversed. And I don't know. To me, this looks pretty corrective so far. So it could be that, you know, Germany makes its way up into some higher high up here. This could just be a recovery rally, you know, after a pretty deep pullback. We should know what we'll start doing is if our market starts taking a different direction, either up or down, and then we'll see how Germany performs against our market, and we can maybe infer from that whether or not this is, you know, like an A, B, C pullback with, you know, something like this going forward, or if it's going to be more of just a, you know, a rally up here, kind of trade down, and then accelerate back down to the downside. So right now it's hard to tell whether these markets, there's a lot of support right here. You can see around this 29 area, a lot of trading sideways here. And so it's no surprise that the market really pulled back to that area and stopped. So that's kind of what support and resistance do. So not surprised about the pullback to this area. All right, let's look at Japan. Japan, yeah, I mean, same kind of thing, although this looks weaker, really, even than Germany. I mean, anytime you get a gap this late in the sell-off, I mean, we had 1, 2, 3 weeks down, and then a gap down. I mean, that's pretty substantial. So I would say Japan looks a little weaker than Germany, and then the UK is probably the strongest of the three. I mean, it looks so far we have higher lows, right? We have a series of we have a pullback here, but so far, I would say we need to close above this bar right here. But so far we have higher lows, right? We got a low, higher low, higher low, higher low, higher low. You know, so it could be the UK. The UK is strong too, and maybe the strongest. We'll just have to wait and see. But again, when our market starts to show some sort of trend direction, whether up or down, and I think the odds are probably 65-35 down right now. So it just depends on whether we hold that 27-25 area. So keep a close eye on that area. All right, look at the Russell. You know, the Russell has been kind of a darling of late, the Russell and the NASDAQ. And as you can see, it's been very, very strong. It had a pullback last week and then basically a reversal. So I would say, you know, the Russell could very well come up here and make new high. There's a lot of supply right here. That's anytime you have a long wick like that, that could portend a fair amount of supply here. A lot of sellers in this wick area. In fact, let's see if we can get the volume on the chart and just see. Yeah, not really. I mean, the volume kind of increased here and has been decreasing on the pullback. So that tells me there's more upside on the Russell 2000. So there's kind of a general belief that the tax cuts are going to really favor these small cap stocks, and it could be that the small cap stocks do better with the tax cuts. But I think the bigger problem is these deficits are really the tax cuts. The problem with tax cuts is there was no cut in government, and so, you know, the revenue to the government is going to collapse or decrease significantly, but the spending is going to stay the same because we haven't cut any spending. So I think that's going to start causing problems, and interest rate market's going to start responding to that, and it's going to really, of course, a higher interest rate market really hurts small caps. So because they tend to borrow a lot of money and things like that. Let's switch over to the other charts, the TOS charts, Thinkorswim charts. Let's look at gold. This is gold. So we had the big run up into 2011 bull market, and if you really look at this area right in here, all this kind of stuff that's been happening, we're kind of like right here in the S&P 500. So all this congestion and everything, the way this is kind of played out, to me looks just like the S&P 500. So we could end up starting to see, some dramatic selling going on in the S&P 500. It looks to me like it's kind of following the way gold did back in 2012. And this kind of move could be, the next move. So, it just looks very similar, I guess, is all. Silver, both these markets are really strange. Although, so if we get a close above this high, if we start getting, like next week, if we get a close, let's say we get a candle that looks like that, I might go long silver. I think silver is really close to, we kind of broke down, accelerated down out of this congestion area right here, and I think silver's poised for a pretty big rally, probably, maybe as high as up in here in this yellow box. So if you don't own silver, it's maybe a good time to look at buying silver. Same with gold. These are probably going to move together. Although gold broke through this trend line, it looks like it's trying to settle here, and it could go lower, maybe into this 1227 area. But if you look at something like the GDXJ, which is the junior miners, they're already starting to try to break out here. We've got a small breakout going on, which could kind of see here potentially a breakout happening. This is more like a straight line, like a descending triangle. If we break out of that descending triangle, the next move is going to be something up into this area around here. So for the GDXJ. So in fact, I'm looking at buying some calls here. I'm probably going to buy some calls, some $35 calls or something like that, and try to play it to about $40. Let's see what that does. If I look at the GDXJ, look at maybe some, go like 100 days out, and look at some $35 calls. It looks like you can, there's plenty of action there, 1,452 contracts on that. And so somewhere between, maybe around 152 or so, you can buy those. And if this moves up to 39, then this is going to have to be about $4 at expiration. So it's a pretty good return. That's one of the trades I'm looking at here recently. Let's look at oil. Oil's, oil has been much stronger than I anticipated, and it's trading now above our decision point area. So we don't have a pivot any longer. So I'm not really sure, where oil could stop. It could go, the 62% retracement is up here around 79, which is a pretty deep retracement. But if this is an A and a B, and then we're looking for C, then 62% is not unheard of. So I don't know, maybe oil goes as high as up here around $78, $79, and then starts to roll over. It still wouldn't be long too many energy stocks at this point, but I don't know. I'm surprised it's gone this far. So maybe you shouldn't listen to me on oil, or on some other things too, for that matter. But this is it's maybe a good time to talk about it. This is this is a game of probabilities. I mean, what you do is you try to enter the market in areas where the probability of the direction that you're betting on is high. Okay, that's essentially what you do, and you try to keep tight stops so that you don't lose a lot of money. You focus on not losing money. That's the key. All right. What else do we have over here? We haven't looked at the euro yet. The euro continues to look like a rally here. Looks pretty strong off of this kind of I don't know. I had a triangle drawn here. I don't know that was a triangle. We could be going, to this pivot area off this previous, if this was the wave 4 right here, this rally up and then 5 down, we could be headed for, this zone here off this pivot. So kind of a zone like right in here. If you zoom in on the euro, the euro looks a little tired right now. I mean, it could be that. Let's see. Let's look at like a. We got a pretty decent on a 4-hour chart. We got a pretty decent. I mean, you see, this kind of looks like kind of an A B, A B A B C. So. With C being a 1, 2, 3, 4, 5, so this could be about done, or it might go a little higher. I don't know. It's hard to say. But right now it's pretty strong. I mean, it's trading above this trend line. It hasn't broken this trend line, not even come close really. So I would maybe look for a break of this trend line before I did anything short on the euro. As long as it stays above this trend line, I would maybe stay long the euro. So I hope that helps on the euro. U.S. dollar, Canadian dollar is pulling back, obviously, since the dollar is rallying. Actually, what I just said is wrong. The euro, U.S. dollar, the dollar must be, well, the dollar pulled back during this run up, right? This run up means the dollar was going down. The euro was kind of trading sideways and then broke. So I mean, the euro, the U.S. dollar, Canadian dollar. So this might be about done. Might go a little lower. Maybe let's draw a line here. Maybe somewhere around this area. Some structure over here that might find support on. So I still think the U.S. dollar, Canadian dollars may be a good place to park some money potentially, especially if we go back to and look at a weekly. Let's go back and look at the weekly chart. You can see how strong this. I mean, this looks like an ABC, right? And then this looks pretty strong, coming out of here. And we've got. Let me get rid of some of these. Get rid of all these lines. We don't need that line. Don't need that line. We really don't need any of these lines. Let me get rid of those. All right, now let's put in a line. Here's the initial trend line. And then you can see we kind of accelerated. We have an accelerated trend line here. I can grab that. There we go. If you zoom in even further, I mean, you can even see a more accelerated trend line. So, it's possible that the U.S. dollar, Canadian dollar, I mean, it might pull back to here, rally a little bit, and then maybe even pull back to this trend line before it resumes this uptrend, or it could pull all the way back to this trend line. But I think the U.S. dollar, Canadian dollar, you should be looking for places to enter this particular market. I think it's going to be a good place to be. All right, I think that's it, everybody. I've pretty much covered every market, I think. Let's go back and just just revisit the S&P 500 just real quickly. That's the SPY, S&P 500 index. And again, we're looking at this 2725 area. It's a very critical area. It's also, if you notice, it's kind of near the bottom of this trend line here. So if we break this and break the trend line, this whole structure is likely broken. And this whole structure goes all the way back to the 2016 lows. So keep a close eye on that 2725 area. And with that, I think we'll end the program. Thank you for coming in this week. Really appreciate you coming in. You know, forward the YouTube videos to some friends and family members. Maybe there's some people that would feel like they're getting something out of this. I know when things start to happen, it's really hard to make a decision. You know, the psychology really starts to work on you, and I think this channel is going to be a decent place for people to go that are trying to decide what to do. You know, when the market gets down here somewhere, what do I do? You know, what do I do? Am I close to the bottom? Should I wait, or should I? You know, there's just a lot of that psychology can really work on you, and it tends to work on you at the worst possible moment, you know. So copy the link, send it to some friends and family members. Let's get the viewership up, subscribe, like the video, things like that, and we'll keep coming back and doing this. I think it's only going to be in the next several months, 2 to 3 to 4 months. This is going to be a very important YouTube channel. I'm not saying that just to toot my own horn, but I just think a lot of people are going to need a place to go, help make decisions about what to do with their 401ks and stuff. And I'm not a broker, you know, I'm not an advisor. You know, everybody gets to make their own decisions about their money, but sometimes it's just helpful to have, you know, somebody explain certain things when we're right in the middle of the fray, so to speak. So hopefully that's helping you all that are viewing here. Okay. All right. With that, we'll end. We'll see you next week. Take care, everybody. Bye-bye.